Dhruv Mehta, no one likes the sound of when you hear that commission structures are going to be changed. So I don't want you to react to what SEBI has done and whether it is right or wrong. But the question is that the decision has been taken and what is next?
Yeah. So I think what is next is that what I believe is that the step has been taken, but without proper consideration. The cost in mutual funds were allowed to increase in 2012 by some of the incentives that SEBI had brought in to increase the expenses to allow a wider distribution of the product. And we have seen the benefit of that with this, of course, supported by the mutual fund Sahi campaign, overall factors. Now, in the current year itself, SEBI had reduced the expenses already by 20 basis points by removal of some of these incentives. So I think further reduction, what you say, has been taken, but I think per se itself, the business viability, if it is not good for both the manufacturers as well as distributors, it impacts, excess of the product. So I think the scale, what we are looking at from 2012 to today, 2018, what the growth in industry has happened at a very competitive cost globally. In terms of India's size, whatever cost that the investor is paying is among the lowest globally. And therefore, if one focuses more on the performance than the cost, what is the value add that the industry is providing, I think the cost is not warranted, but the decision having made, I think the industry has to continue to focus more on performance, because ultimately, while people can say that 20-25 basis point does make a lot of difference in the long run, I think it is the end outcome that a customer who puts money into equity funds over a 10-year period gets a return of something like 10, 12, 14% return. That is the real value benefit that the customer gets versus just, too much focus on cost. The second is that the regulator, when changing the expenses, rather than focusing on one segment of the mutual fund, there are a lot of other products.
Right.
If, arbitrage happens, today mutual fund is the most ideal vehicle for retail investment. And the move needs to be to encourage good performance, good behavior. But generally, we have a tendency to cut things, Right. So while having cut expenses, they should have maybe also introduced something which would reward,
Right.
Fund managers who deliver, good performance.
Dhruv, but do you believe that after this 25 bips, there could be further cut in mutual fund expense ratio as well? The aim, I guess, for the regulator would be to bring us at par with the global mutual fund industry.
No, we are already, according to the study that FIFA has done, with a 20 basis, cut, which they have already introduced prior to this move, because they removed the additional expense in lieu of exit loads, which was a reduction of 15 basis points, and the move of giving incentives only for from B15 countries to B15 cities to B30 cities has also led to a drop of about 5 basis points. So already there has been a reduction in the last 2-3 months of about 20 basis points. With this reduction, according to us, the total cost that an investor in India pays is among the lowest in the world, maybe lower than developed countries like USA and Australia. So I think the size over there, when we talk of scale of economy, US is a $13 trillion market and India is maybe in $300 billion. So I think there is no case of that the scale benefits have not been given to the Indian investor. What has also been lost sight of.
Fair point, Dhruv. We're going to leave it there.